I'm joined now by Alastair Newton, Senior Political Analyst at Nomura International. Thank you very much indeed for joining us today, Alastair. We're looking, first of all, at the yuan, because it really is going to dominate. And I was struck recently by how much there has been on American television and in newspapers, really sort of advertising campaigns, really trying to explain to people that China's almost taken away their jobs. Now, whether or not that's strictly accurate, it sets a tone, doesn't it, for this visit?
It does, Andrea, and actually it's very inaccurate. It simply is not the case if one looks at the reality on the ground. But Americans do believe this, and this is largely underpinning public opinion polls in the US, which are reflecting a big pushback against the benefits of globalization from a US perspective. Add to that the fact that you've got real pressure building in Congress again for anti-China legislation. We saw Senator Schumer and his colleagues bring in a new draft bill on Monday. Now, the administration would like this issue to go away. There's lots of other things they want to focus on: market opening in China, intellectual property rights. But the yuan is going to continue to dominate the debate between the US and China, whether the administration or indeed Hu Jintao likes it or not.
And Hu Jintao is going to presumably have to listen politely to what's been said, but is there any feeling amongst experts like you on China that he's going to suddenly have some kind of Damascus moment and decide that, OK, I believe you, I'll let the yuan appreciate?
No, I think he's under a lot of domestic pressure not to let the yuan appreciate too quickly. Let's look at the facts. It's appreciated 3.5% against the dollar in the last couple of weeks in any case. That is the nominal exchange rate. If we take inflation into account, and we know that wages in the manufacturing zone of China went up by 17% in the last 12 months, real inflation is actually running considerably ahead of the nominal figure. So the Chinese administration is under considerable pressure from the export lobby not to let the currency appreciate too quickly. And frankly, I don't think they can appreciate it quickly enough to satisfy the anti-China hawks in Washington, come what may. And we do see, despite the fact that we think this visit will help to reset the relationship a little, we do see a continuing possibility, not yet a probability, of some sort of anti-China legislation passing Congress in the coming months.
Now, that really would be very significant, wouldn't it? Because China is such an important player for the US, but also Europe has been building stronger ties with China. So there's this kind of interesting triangulation, isn't there?
That's right. I mean, you and I discussed in a previous programme about the fact that legislation would probably be symbolically more significant than substantively. But the symbolism of it is not to be underestimated. And it's very interesting that last week Chinese Vice Premier Li Keqiang was here in Europe handing out largesse, building relations with the Europeans, promises to buy European sovereign debt from the peripherals. Fairly token amounts, but still an important gesture, looking to push back against the possibility of rising protectionist pressures in Europe as well. This is Chinese soft diplomacy at play.
Now, you touched there on China's own inflation issues. How well is China able now to manage internally its own economy and not allow either the inflation to run away or those asset bubbles to become dangerous?
Well, you know, managing the China's economy has got more difficult every year since the moment I pick as China's watershed moment, 1992, and Deng Xiaoping's Nanshun, his great imperial tour, which really set China on the track to become the world's factory. For all that, China's leaders have since then managed China through a significant number of major crises without derailing economic growth. And we remain very confident that China will stay on track, will get inflation under control. This is a particularly sensitive issue. Keep in mind, the original cause of Tiananmen Square demonstrations was food price inflation. So this is a top priority for China. I think they will continue to push up the capital reserve ratio, now at 19%. I think we counted 7 increases last year. They will do what is necessary to rein inflation in. That is likely to include renminbi appreciation, provided the Americans don't actually put a gun to their head through legislation.
OK, we'll keep a very close eye on it. Alastair, thank you very much for your insight.